Facebook becomes a face flop. Does that mean the bull market run is over? We'll talk about that on 3 minutes on Markets and Money. This morning, Facebook is going to open down about 20% at the open, really taking the stock all the way back to where we were at previous lows here back in early 2021. Again, erasing a lot of gains. Of course, this is on the back of bad earnings guidance and lower monthly users. And again, this is a very mature company now, 18 years old, and of course now facing stiff competition from competitors like TikTok, who are now taking on more and more users. So the question now becomes is, can they reverse that trend of slower user growth, particularly when their demographic tends to lean towards the baby boomer generation, while other platforms tend to lean towards the younger generations, again, like TikTok, like Snapchat. However, the ramifications of Facebook, because of its size in terms of market cap, is rippling across the major indexes. This morning, the major indexes are going to open weaker, but again, this has been a very sharp rally for the markets here over the last few days. After coming down, retesting these October lows that we talked about previously, getting into 3 standard deviation territory below the 50-day moving averages, markets rallied yesterday back above the 20-day moving average and is approaching the 50-day moving average here. So again, a little bit of a pullback today won't be surprising, considering that Facebook is such a large portion of the market cap weighting of the index. It's going to drag down the index kind of all by itself, while other stocks are going to continue to perform well, but it's going to impact a lot of the technology stocks really kind of across the board, creating some profit taking, particularly in some of the big runs we've seen in stocks as of late. That impact will be a lot bigger on the NASDAQ. As we saw yesterday, the NASDAQ has not rallied back as much as the S&P, but it also went down more than the S&P during the decline because of the impact on technology stocks. That rally yesterday, getting the NASDAQ back above the 20-day moving average. We're going to fall back below that today because of what's happening with Facebook in particular. NASDAQ looking to be down about 2% here at the open. So again, going to be a significant weight on the NASDAQ here. At the moment, again, we're still on buy signals really kind of across the board. So there's not a lot to worry about here, just a bit of profit taking today. What'll be important is how we finish the day. If the market opens down and stays down all day long, that may signal that this recent reflex rally may be getting to its end in the short term. If the market recovers some today, and outside of Facebook, other stocks continue to hold up well, the Apples, the Microsofts, the Googles, the Amazons, if those hold up well, that should buoy for a bit more rally here in the near future. Again, we're not overbought dramatically on the market yet. We're still on a buy signal. So again, don't want to get too overly defensive here, but pay attention to what's happening with some of these broader stocks, because again, this still looks very much like a reflexive rally within a correctional period in the markets. So again, if you didn't like this decline in your portfolio, use this rally here that we're having to help clean up some of that risk and reduce your volatility relative to the market. That's 3 minutes on Markets and Money. See you tomorrow.